Hello and welcome to IB Times TV. I'm Leanna Brinder, business editor for the International Business Times. Joining me now is Christopher Cabrera. He's the CEO of Xactly. So hi Chris.
Hi, how are you?
I'm good. Well, you're here for the very hot topic on bankers' bonuses, and especially after the spate of financial scandals that's happened, regulators as well as politicians have gleaned that bonuses are intrinsically linked to maybe misbehavior. I know Xactly have done some research recently in terms of how bonuses and performances correlated, so maybe you can walk me through some of that.
Yeah, I mean, I think there's no question that there's strong correlation between incentives and behavior, and that's why people put out these kinds of incentives. I do think there's a broader question about, I think it's difficult to sort of blame the people who are on the incentives for doing exactly what the incentives were driving them to do. And so I think in a lot of ways it has to do with a broader perspective of how do we get better alignment between what the overall bank in this case is trying to do and with the agents that are working for them. And so I think there's blame to go around here, and but there's no question that there's a strong correlation between what we incentivize these folks to do and what they actually do.
Sure. Different governments are treating, I suppose, bonuses in different ways. Yeah. And in the UK, they're looking at deferring bonuses for 10 years. In Europe, we're looking at caps as well on the amounts. But in terms of aligning bonuses with performance with a more positive light, what would you say are the key points to it rather than just blanket banning bonuses?
Yeah, I think you're absolutely right. I mean, I think there's a tendency to want to correct everything that was wrong and paint with these broad strokes and try to fix everything. And I think that's dangerous. I think we've done that in the States as well. We've done a lot of regulation and things as a result of bad things that happened during the mortgage industry meltdown, where loans were being given to people that didn't qualify and shouldn't have qualified, but the incentives were there to get them to do that. It's not dissimilar here. I mean, I think you deal with a lot of the same things. I think that the danger is to overcorrect. The danger is to go too far, and I think when you're talking about caps, generally that's a negative thing as it relates to behavior. I think when you're talking about jail time, that's generally going to drive maybe too strong of a correction than you might want. I think when you're talking about those types of punitive results, it's just might be too much too soon.
We've talked about, of course, a lot of the negative aspects of correlation between bonuses and performance, but are there any examples in terms of industry-wide trends as well that can actually show how bonuses can actually help performance in a positive way?
Yeah, so there's a lot of data that our company collects to correlate specific bonuses to behavior, but of course they're all very individualized to whatever the bank might want to be doing. If it's for a teller, for example, we have banks that are incentivizing you walk in to make a deposit and the teller gets you to walk 10 feet to a home loan agent, that they get some kind of a bonus or a spiff. So there's lots of different things like that. But I will tell you the thing that is most correlative in terms of the success with a bonus has to do with, we talked about this alignment and getting the right alignment, but having the visibility and transparency so that people who are getting paid these bonuses can look at their iPhone and their iPad and see exactly how they're being paid, and so that there's no confusion and there's no finger pointing or the blame game when things do go maybe the wrong way.
Okay, so one of the other, I suppose, knock-on negative aspects that blanket changes to bonuses could glean is effectively, a lot of critics are saying that if you ban bonuses, for instance, or defer it, in the banking industry, it would actually hurt institutions trying to claw back those payments. How do you see lack of bonuses affecting fixed pay?
Well, I think this is a tough balancing act. I think the government needs to be careful that because of this overcorrection, that they could hurt the ability to be competitive. And I think there's no question that incentives drive behavior. The question is not let's create all kinds of regulations that make this so difficult and cap people. I mean, caps are generally considered pretty negative in the compensation world, and they will limit businesses' ability to drive the best behaviors. I think the better approach is to work on how do we get alignment so that when these agents or the people in the bank, the employees, are doing things to maximize their comp, that's goodness for the company and that it's a win-win situation. You should never be in a situation where them overperforming on a bonus is somehow going to be bad for the business. So, and putting a cap in place implies basically that. I mean, I think so. I'm anti-cap, and I think the whole notion about compensation is dangling the carrot and having the time frame be as close as possible to the behavior. Doing anything that has 10-year tail on it, is demotivational. So I get why these things are coming, to the forefront, but to my comment earlier, I think it's an overcorrection, and I think it will lead you to be less competitive, and that's dangerous, and that's bad for business. So I think there's a happy medium here if we get back to the basics of what are we trying to do in the first place, and the basics around compensation and behavioral science, which there is a meeting of the minds that could take place that would serve everybody, I think.
Sure, and on actually lack of competitivity, which you just picked up on, do you see there possibly being a flight of certain industry workers, let's say in banking, moving from, let's say, US, EU over to Asia? Because quite a few contacts that I've spoken to are very much thinking or looking at jobs over there because there's a lot more flexibility and a lot more flexibility in terms of the bonuses that they would receive for the same job they're doing now.
Absolutely. I mean, the people will go where the money is. There's no, this isn't rocket science. That's what they're going to do. And so I think, that needs to be taken very seriously and considered rather than just knee-jerk reaction, let's put a cap and, put people in jail. I mean, that's not going to drive the right behavior. And, there might be some people who were doing absolutely the wrong things because they have no scruples and are bad people and they should go to jail. But the vast majority of people are good people that were really doing what the comp plan was incentivizing them to do. So, this gets back to the point of who's at fault here, the person on the plan who's doing what the plan was telling them to do, or the people who designed the plan. And I think there's shared fault all around, and the answer is get everybody in alignment and get it to where it's a win-win situation.
Sure, and to wrap up, we know that you're anti-cap, for instance, but
yes.
What would you give as an executive summary top-line plan on how bonuses and bonus structures should be enforced, maybe?
Well, I think I'd have to, it's a tough question and a delicate answer. There's no quick answer, and I wouldn't want to be, as flippant as to say I have the answer, and and it's going to be different for each bank, right? It's going to be different for each institution. I think the regulators need to do their thing and make sure that the public is protected from people, ripping them off. But I also think there's a little bit of the, caveat emptor, piece of it where, people aren't stupid. They're working with these banks. Yes, they need to trust them. Yes, they need to be regulated so that they, there's some controls in place. But at the end of the day, the banks need to be able to drive the behaviors that are going to best, move forward their businesses. And that's going to make everything, the economy and everything stronger for all of us. The way to do that, I believe, is to take care of the customer, right? I mean, that's what these banks are all trying to do, is they're trying to get more wallet share of every customer. And they're trying to get, I don't want just your bank account, I want your checking account, your savings account, your, investment bank, everything. They want it all. And they should. I mean, and the bank who treats the customer the best should get that business. And so the incentive should be around that aspect of it, not selling things that I don't need, and maybe some of the less scrupulous things that have been going on.
Great. Well, thank you so much for your time.
Yeah, thank you. Thanks for talking.
And that was Christopher Cabrera, CEO of Xactly.